I'm still in the camp that Bitcoin's got more downside. Again, whether it's 12, 13, whether it's 10, whether it's 15, we'll see. I'd be hard pressed considering the situation with the Fed, with the inflation. This is that first cycle, the first bear market cycle for Bitcoin where the Fed has not been printing money. And I think you have to take that into account and say, well, why would this cycle be less downside than past cycles, which are been 80 to 85%? So to me, it makes me even a little nervous, like it could go lower than 12, 13, which would be 80 to 85%. So hopefully that doesn't come to fruition. I'm going to start accumulating, continue accumulating in the teens and the low teens, even down below. But I would love to see a bottom sooner than later. But I got to just say to myself, what are the charts saying? The charts are still saying downside. Look at Bitcoin's chart right off the bat here. Yesterday was looking good. We had a nice bounce. The dollar was falling a little bit. Today, the dollar started to gain strength and it just smoked Bitcoin. And let's be fair. I mean, Bitcoin's not alone here. We know the stock market, anytime the dollar goes up, the stock market is pulling back as well. Basically, any risk assets, which primarily are technology, but also S&P stocks, Bitcoin, crypto as a whole. And that's really what this is at this point. I mean, you look at the dollar, the DXY, and you can see this inverse relationship. So this is the DXY. It's been in this channel. You see we hit it here. We pulled back. We're kind of just chopping sideways here. You could make a case it has a double top, but it does concern me that there's still a chance the dollar could pop one more time into this upper band before it starts to come back in. So again, Jerome Powell, he was out there on last Friday with Jackson Hole, and he just smoked the market by basically being extremely hawkish. And that we saw Bitcoin drop. We saw the stock market take a massive dump as well. And this is a market, again, that is worried that, number one, Jerome Powell is going to push us into a steep recession. But number two, they're also worried. They want the free money. They want the drugs, right? The drugs was just printing. Yes. And the Fed is talking a tough game right now. Bottom line is, no, I don't believe them. I think they're talking a tough game. They don't like the fact that the stock market off of its lows rallied 20% in a couple months. That is inflationary. It makes people feel richer, then they spend more money. So they want to talk the stock market down. That's why what we've seen happen has happened. But I do think that the Fed is at a point where they're going to raise 50 basis points in September, maybe another 25 by end of year. And then I still think the economy is weakening very quickly. It hasn't shown in the jobs numbers yet, but we have a big jobs number on Friday. I want to see what those numbers show. If it shows weakening, then I think the market actually might rejoice and rally, which is really messed up, right? I mean, we're seeing good numbers, good economic numbers, and the market is selling off. The market wants a weaker economy, so the Fed gets on the sidelines. The Fed, by raising rates, is sucking money out of the system, right? Think about a vacuum. It's going back to economics 101. Less dollars in the system, then the dollars are worth more, right? So that's why printing of money, the dollar should go down. They're doing the opposite right now. The dollar goes up. Then you also have Russia. That's a concern globally. You have China and Taiwan. That's a concern globally. And what we know is, historically, if people are worried about geopolitical events, they go to the dollar for safety. Yes. Now, a lot of people don't understand this, but they're like, oh, but the dollar, it's been printed. We got so much debt here. Yeah. But you know what? Every other country is in the same boat. We're still the ship that's floating the best with holes in our hull, right? So it's still the best out there, and so people are still going there for safety. So I think the higher the dollar goes, the weaker the economy. So I think this is absolutely this inverse relationship. And a lot of people, I mean, listen, for average Americans, a strong dollar means we can go to Europe, and it's cheaper for us to go to Japan. I mean, our dollar goes further. The negative is, for the economy, is that a company that sells in countries, right? So let's take IBM. IBM in their last conference call said they took a $3 billion loss due to currencies. And what that means is that they're selling something in Japan and they're getting yen. And by the time they convert it back to dollars, the dollar has strengthened and they're getting less dollars for that. So for instance, it might be a 10% revenue haircut just by that conversion taking place. And so that's really the negative, how it's hurting earnings. And by default, it's hurting, these companies, and therefore we're seeing stock prices also go down. I do think Bitcoin will decouple and it'll become more like the digital gold. So this is the gold chart we see before us. But I do think that at some point you do see this change where Bitcoin has been historically that, risk asset. It goes down when markets go down. I eventually think it's going to switch into more of a gold where it goes up when things are scary. Okay. Now, this is the gold chart. And what's amazing about the gold chart is, number one, it's still the best performing asset between Bitcoin and the stock market for the year. I think it's down about 4% or 5% on the year. But basically, look at this trend line. Pivot high, pivot high, pivot high. We broke out. We tested this line again. Now we're testing it again. I think gold's a buy here. I think you're above this line. I think you're going to start to head up. You could even be forming maybe an inverse head and shoulders here if we start to trade up. And again, I like gold here. I think it's a good play. It tells me that the dollar may be topping out. And by the way, that's another important point to make here. So think about this for everyone watching. Last Friday, Jerome Powell, probably the most hawkish he's been ever, right? I mean, it just crushed the market. NASDAQ was down 4% in a day. That's a huge move. And everyone's like, oh, he's so hawkish. They're going to raise by 100 basis points. They're going to continue to raise. Well, go ask the bond market if that's true, because the bond market is the biggest, smartest investing market out there. And you know what yields did on Friday? Nothing. And what that tells me is the bond market is calling Jerome Powell's bluff and saying, no, we don't believe that they're going to be able to raise that much more. And if we go to the 10-year yield, here we go. This is the daily chart. We're not even back to the highs from June on the 10-year yield. That's calling Jerome Powell's bluff and saying, we don't think interest rates are going to go much higher from here. Again, I still think 50 basis points in September, maybe another 25 later in the year. I think that's it. And I think the bond market's confirming that. We could do Ethereum to Bitcoin. Sure, absolutely. Let's see what we got here. So, and again, I don't usually look at this chart. So this is going to be the first time I'm looking at this chart. I usually look at it in terms of dollars. But basically what you can see is you basically got this almost pseudo triple top up here. And now what's intriguing about that is that triple tops, the more you hit a level like this when it's a triple top, the more likely you get a breakout. Yes. So what this could tell us is that you might see Ethereum versus Bitcoin actually make a big move here. Maybe that coincides with the merge. We'll have to see, but it certainly is an interesting chart here. And you could even argue that you have this lower channel as well, right from here. So you have a kind of a pivot low here, and then over here, you kind of pierced it before this recent move. But this looks like a bullish pattern to me. So it wouldn't shock me to see Ethereum start to make a move to the upside. We always, as traders, we don't want to jump the gun because sometimes we can get caught with our pants down in that scenario. So we want to see if it breaks out, then yes, I think that's the play where you're going to get Ethereum to start making more market cap or advancing its market cap versus Bitcoin's market cap. In a bear market, education is everything, right? In a bull market, you close your eyes, you throw a dart at the crypto board or at the stock board, and you probably make money. In this environment, it separates the kind of the people that don't know anything from the people that have actually learned things. So you got to start learning. You got to start being able to control your emotions. There's basically 3 keys to becoming a master trader, right? You have discipline, which you have to be disciplined or the markets, especially bear markets, will eat you alive. Emotional control, which is emotions, goes into the same kind of thought process. You can't get excited at the highs, like on Bitcoin at 69,000. You have to remain objective. And then also you have to look at it and say, how do I use that knowledge about noticing the emotional state of investors that aren't me? And how do I use that to my advantage? When you see everyone clamoring for Bitcoin at 69,000, you need to be able to step back and say, whoa, that's kind of scary to me. That's a mark of a top. And let me not chase that. And then lastly, technicals, charts, you have bottoming tails, you have topping tails, reversal can. I mean, there's everything in the chart is like a book in a foreign language. We don't know how to read it. If we learn how to read it, it's very, very helpful to making money in any market.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.